Hello and welcome to DummieRating. Selecting a mutual fund or ETF can be a daunting task, and predicting the behavior of financial markets is very difficult. We can only look at the history. There are numerous approaches to evaluating the past performance of investments. The simplest and most common one is to look at the return of previous periods, but what does it tell us? It did well in the past, so it will do even better in the future? Or, because it rose recently, it will decline again soon? There is no such thing as a normal distribution for investment performance, which leads us to the second most common approach. The so-called risk-return chart, showing return over volatility. Well, volatility or standard deviation really shows only fluctuations. But risk is rather the chance of investments declining in value. So this is not very helpful either. Then, we have more scientific approaches like alpha, beta, trainer and others, which are too complicated for most of us. Let's take a step back and think about what really matters. Using the magic triangle of investing as the blueprint, it is return, risk, and liquidity. Looking at the chart, we can see the total return as the difference between value at the beginning and the end of an investment period. The risk or maximum drawdown is the difference between the highest peak and the lowest low during the period. This is the theoretical maximum loss if we invest at the peak and sell at the bottom. Liquidity refers to the ease with which an asset can be converted into cash without affecting its market value. In other words, it is the ability of an asset to be bought or sold quickly and at a fair market price. We transform this into the longest loss period. It is the longest time frame our financial asset needed to recover from a drawdown. It is in days or months. Please note that liquidity is often used to describe minimum holding or notice periods for funds, or trade volumes for ETFs. Longest loss period and liquidity are not the same. These three parameters in conjunction with a specified timeframe form the DummieRating triangle. The total return in percent, including dividends, is the top number. On the bottom left, we have the maximum drawdown in percent. On the bottom right, the longest loss period in days or months. The timeframe in the center can be specified with a start and end date or an end date and the timespan in years. We believe these three parameters are a good indicator for past performance and risks. DummieRating might help for initial screenings of investment options or direct comparison of funds with the same strategy and benchmark, but, by no means, can replace financial advice or thorough research. Please enjoy our app and thank you for your attention.